We're at GreenFin 24, and we're talking with Jeff Gitterman of Gitterman Asset Management. Jeff, how are you today?
I'm great, Paul. How are you? Great to see you.
It's really good to see you, too. There's a lot of programming going on here, 150 speakers, a lot of different companies represented. Why are you at the event today?
Most importantly, especially today's programming on the whole carbon track and really trying to understand the intersection of nature and carbon tracking markets. It's, I think, the fulcrum that we need to really start to move markets and pricing. And to me, it's one of the most important levers that we have. So I'm here to learn. I'm a novice really in this space. I'm mostly involved in capital markets repricing due to physical risk. But to me, the really underlying lever that needs to be pushed is carbon pricing.
Yes, and carbon accounting now is part of what every accounting firm is doing. Companies like Persephone have a whole platform to do that. And talk a little bit about that, because I'm sure there are a lot of our followers who are not actually educated about carbon pricing.
It's interesting, too, because Bob Massey, who started GRI, had a great presentation yesterday, really powerful. The guy should be a preacher. But he spoke about the really driving factor of this whole accounting auditing system is to refigure it to bring carbon into that picture and really start pricing it from the ground up. And I think, especially on scope 3, unless you're going to really get into the details on the auditing and accounting side, you're not going to pick up scope 3. You're not going to get to that point where you can measure it. And what's interesting is it seems to be happening. It seems to have a mind of its own. EY is here. All the big accounting firms, they're running with it. I think, it's one of those situations where when the tide goes out, you're going to see who's not wearing pants. I think that's very reminiscent of what's happening right now, because it's like the insurance industry is changing right now.
Yes.
They're starting to reprice. The accounting and auditing systems are changing. So the underbelly of the capital market system of pricing is starting to figure things out that they can't go forward without a really transparent view. And thankfully, the technologies are now here where even from space, we're capturing all kinds of sensors on carbon emissions, and you just can't hide anymore.
So how do you see that working into your asset management business? You have many different kinds of clients. How is that working when it comes to portfolio strategies?
It's interesting because it's so new that we're trying to figure out on the risk side. It's not necessarily on the alpha side, but it's more on the risk side. What companies are really overexposed where the market hasn't priced that in yet. So we're trying to make sure we're avoiding companies that have huge carbon intensity that are going to be kind of the ones that are out there without their pants on when the tide goes out, and making sure to stay away from those companies. And then, it was interesting looking for the bright spotlights of companies that are really thinking ahead of these issues and trying to figure it out before the tide goes out. But the tide's going out quick.
Yes, and you mentioned the insurance industry as an important part of this leverage process. I know I've had a number of conversations recently with people that are working with specialized insurance companies this is what their focus is going forward. Is there any kind of interplay there around the capital markets where your portfolios are participating?
One of the fascinating businesses we have spoken to is Premiums for the Planet, where they're really looking at, from the brokerage angle up, addressing this issue and putting pressure on insurance companies to stop funding fossil fuels. The interesting thing is we're at this really interesting intersection where insurance companies are recognizing the risk. Swiss Re just came out recently and said the reinsurance industry has grossly underestimated the cost of climate change, which is interesting because that's their one job that they're supposed to do. But, it's the fact of we lived in 12,000 years of a stable climate, and now we're in an unstable climate, as we've spoken about before. So a company like Premiums for the Planet is looking at how do we get these companies to not just price the risk correctly, but stop supporting the industries that are creating the risk. Those are the types of interesting intersections that we're looking for.
Great, Jeff. How's the conference going for you? You go to a lot of these events. What's special about this one?
I think this is the most high-level one where you're really getting into the nitty-gritty details of how climate change is going to be accounted for. You don't get that at a lot of conferences. You get a lot of big picture at a lot of conferences, but you don't really get to dig into how do we address the risks from a corporate level and an accounting and standards level like they do at GreenFin.
Great. Thanks very much for your time today. Jeff Gitterman of Gitterman Asset Management, and we're at GreenFin 24.
Thanks, Paul.